Hi, this is Zach Mead from Zach's Traders Cafe with a look at the major markets on Monday, the 1st of August. Starting off with the FTSE 100 and notional support here towards this uptrend line from the end of last month and the 20-day moving average at 66.59. At the moment, in fact, the FTSE managing to find support actually at and just below the 10-day moving average around 67.20, but one would probably have to give it a bit more wiggle room than that as far as the notional support area, so therefore the 20-day line looks about right. RSI at 63, so very far away from being overbought at the moment, even after all the gains we've seen. Notional target as high as 69.50 to 7,000 at the June resistance line projection. If you're cautious on this market, maybe wait for that last July peak to be broken at 67.80 before going long again, but it really does look as though there is going to be more on the upside for this market. Onto the DAX, and here also behaving in a very bullish fashion, and actually probably in a way a little bit more predictable than the FTSE, given the way that we've had the clearance of the 50-day moving average earlier last month via a gap, and then the progress higher, coming up to a notional resistance towards 104 to 105, that last peak in April, 104.74. So we're expecting to see that hit over the course of Monday and Tuesday. After that, we can review whether we think this market is going to go much higher or not. The idea probably would be that we would head up towards the 11,000 zone over the course of August. This stage, stop loss either back below the 10-day moving average at 10,186, or if you want to have it, want to be further away from the market, the 200-day line at 10,078. But 10-day line probably the best dynamic stop loss at the moment. Onto the US markets, and a little let up here on the upside for the Dow. That 10,390 gap floor from early July holding a support on an end of day close basis for the Dow, and we also have the 20-day moving average at 18,341 just below that. So let's say the 20-day moving average currently the best end of day close stop loss. If you're cautious on the market, wait for an end of day close back above the 10-day moving average at 18,510 for an eventual 18,800 target at the June resistance line, rather March resistance line projection. RSI is only 59, so plenty of scope for further gains for the Dow. On to the S&P, and here we see a situation where in a way rather more bullish than the Dow, with this very, very strong looking sideways consolidation at and just below the 10-day moving average at 2170, looking for 2220, which is a March resistance line projection over the next couple of weeks. RSI at 64, so well off the overbought level, and 2148, the end of day close stop loss, and the level to buy down to at the moment. For the Nasdaq, it's been a good few sessions, helped along by the heavyweights reporting in the tech sector there. 47.30 at the moment. We were looking for 47.40, or have been looking for 47.40 throughout the course of July. Next target up towards 4,900 while we're above 46.68, which is the 10-day moving average. 4,900 is the a July resistance line projection there, and as I said, should be seen over the course of August. Onto the currencies, and cable a little bit firmer by the end of the week. The consolidation after the bear traps below 131 has been positive. Looks like the initial target here were towards 134.50, which is a late June resistance line projection over the next 2 to 3 sessions. Eurodollar also trying to rehabilitate itself over recent days, just getting back above the 110 zone on the 200-day moving average. 200-day moving average, the back line there at 110.90. We've already basically retested July resistance towards 112, 111.86 was that initial peak, and end of day close above that could take this market back towards the main 114 resistance, especially given the way the RSI has flipped over the neutral 50 level to 56.9. So looking more encouraging there for the euro. Dollar yen, probably the exciting market as far as the crosses are concerned at the moment. We dipped down towards the 101, which is below 102 level on Friday. Still in trouble here as far as the scenario is concerned. Slight initial dip for Monday, but really, while there's no breakback above the 20-day moving average at 104.18, the target here is back towards the 100 yen level. Finishing off with gold, and the picture here still a little bit mixed, but the overall message is a positive one. RSI at 58, so that does hint that we are on the way higher. We have the 10-day moving average at 1330, and while above that, one would expect a progress within this rising trend channel from the end of last year, heading towards 1440 or even 1450 over the next month. That's it from me. More updates at the same time tomorrow.